Okay, welcome to Who Charted, the most exciting 6 minutes in markets. This is Dan Russo, Director of Research at Potomac, along as always with Drew Wells. You know the drill here, 6 charts, 6 minutes. Let's get it started.
All right, everybody, for bond bulls, I think that this could possibly be your only saving grace or the only chart, that you could point to right now in your defense. So this is a ratio that we've tracked for quite a while now. This is quality stocks relative to microcap stocks and 10-year treasury price in the middle pane there. So you don't have to be a technician to figure out these charts are relatively pretty closely identical, right? So we've had a pretty big divergence in the ratio and a bond price for quite some time. So the trend for bonds over multiple time frames has been down, meaning the trend in rates is higher. Correlations remain pretty strong throughout this ratio and treasury note price. So it's going to be an interesting development to see how these work out. We've had some conversations internally on some potential regime shifts on the relationships that we've known to hold for so long, potentially decoupling. So this is one of those charts that we're watching to see if that plays out.
All right, I have been on a little bit of a international global kick of late, not out of the blue, but because I think it makes sense. Main panel here is the global Dow, and we've thrown some Fibonacci extension levels on the chart of the global Dow. It's a weekly chart. Red line is the 10-week moving average. Green line is the 40-week moving average. We're above them. We're also above resistance. We talked about this in our note to clients today, Monday, so you can take a look at that. But what's interesting to me is that 39.79 levels, call it 39.80, lines up with support from the moving average, lines up with price-based support. It's 161.8% fib extension of the consolidation that started 2018 and ended at the COVID lows 2020. So I think as long as you're kind of call it 4,000, right? If the global Dow's above 4,000, you have to give the benefit of the doubt to the bulls. But more importantly, the bottom of the chart there is we're starting to see an uptick in relative strength.
All right, so kind of continuing on with that international theme we've been looking at lately, this is frontier markets relative to ACWI US, right? So this is arguably the riskiest part or riskiest segment of the international sector. You can kind of think of this space very similar to microcaps here domestically in the US, right? So with all the sell-offs that have happened in the indices in the past couple of weeks, it's really interesting to see this ratio kind of hold its ground there, right at the 50-day moving average, right in that channel it's been trading in for the last 3 to 4 months or so. And RSI has essentially gone nowhere. It's neither gotten overbought or oversold. So the trend's been sideways. If you're a chart nerd, like myself, you'll notice that this chart looks very similar to that of copper gold, right? So a lot of smaller companies are big mining exporters. So it's going to be really interesting to see which way this ratio breaks out, either above or below, but it's one we're keeping an eye on.
All right, so if the global Dow is going to start to outperform the S&P 500, we think what's interesting is the inverse relationship between that chart, middle of the panel, and the growth value trade. Now, everybody's been watching the growth value trade. It's been, it's favored growth for a long time. Potential shift going towards value here. If you're a believer that value is going to start to outperform growth, i.e. that top black line continues to go lower, then maybe having some exposure outside of the U.S. Could be an interesting way to play that, since you can see the rolling 63-day correlation between those two ratios at the bottom of the chart there is solidly negative. So I think that for those who need to have exposure outside of the U.S., and maybe you've kind of kept it on the lighter side of late, if you think value lags growth, might make sense to start to increase that allocation outside of the U.S.
Yep. So energy has been one of the areas we've covered a lot in our notes over the past couple of weeks. This is a chart of the global energy ETF. Now, this is about 55% U.S. based as far as the holdings go in the ETF itself, but nice, strong, steady uptrend. We have a 50-day moving average well above the 200-day moving average. Both are upward sloping. We've broken out of that 30 level. One thing that I'll point out there, though, is that most recent candle is called a shooting star. It's when the sellers kind of hammer the bulls back down into that range. So it doesn't necessarily mean that the trend has to reverse, but it just indicates a higher likelihood of a reversal of that trend, but still a small sell-off potentially within the uptrend there that's been happening. So energy is not just the strength in energy is not just located here in the United States. It's also been located globally, and the thing that we've been seeing play out all year long.
All right, my final chart is the dollar index, right? If we're going to talk international, we have to talk currencies to some degree. Dollar's been a solid uptrend with a breakout above the 94.50 level, call it. Now we've kind of thrown back and we're testing that level after a negative divergence on the RSI. So what's interesting to me is that if the dollar breaks down, that actually sets up a pretty compelling dynamic for U.S. investors moving money outside of the U.S. because, upon translation, they get a little bit extra return when converting back to dollars. It's a little bit nuanced, but it's an interesting dynamic that we're watching here as we think about opportunities outside of the U.S. Obviously, if you're a U.S. investor, you need to be paying attention to what the dollar is doing if that's the case. And 94.50 is a key level for the U.S. dollar index. This is heavy Europe, but obviously it's the benchmark that everybody's watching.
All right, everybody. Thanks so much for spending some time with us. Please like and subscribe, and we'll see you in the next video.
Thanks, everyone.